So the Irish government has spent 1.8 million, almost 2 million, trying to defend the Apple Corporation. You see, they're trying to make sure that the taxman doesn't take 19 billion, 14 billion in taxes and 6 billion in interest from the Apple Corporation. I mean, it's not as if there's things in Irish society that we could fix using that 19 billion, like say, for example, building 120,000 homes. But why would the Irish government spend almost 2 million defending Apple? The Irish government has turned Ireland into a corrupt little tax haven. Ireland's doing pretty well in the tax haven league. We're 6 out of 15 in Oxfam's list of the world's worst tax havens. A 2016 Oxfam report said that there was large-scale profit shifting and tax evasion in Ireland. We're also the world's 4th largest shadow banking hub. Shadow banking is off-the-book loans, investments, special purpose financial vehicles, and even crowdfunding. There's 2.2 trillion in the Irish Financial Services Centre in little understood shadow banking vehicles. That's 8 times the size of the Irish economy. Shadow banking also means not having to have a deposit ratio. Banks usually can only lend out a certain amount above what they actually have in their vaults. With shadow banking, you can lend out what you like, when you like, to who you like. But there are many scams through which corporations, vulture funds and multinationals funnel money through Ireland and evade paying tax here. The first way they do this is tax inversion. That's simply to shift your profits to a low tax economy, even though they were made somewhere else. For example, French banks reported 272 million in profits in Ireland. Now, no one believes that they actually made that much money here in Ireland. I mean, Societe Generale's profits in Ireland are 76 times their profits back in France, where their headquarters are. It was aircraft leasing companies funneling their profits into Ireland. They could avail of loopholes which would leave them paying little or no tax, inflated the Irish economy by 26%. Did the Irish economy actually grow by 26%? No, and no economist in the world believed that it did. In fact, it was labelled Leprechaun Economics. They basically pay royalties on what's called intangible assets. An intangible asset might be a logo on a Starbucks cup, a patent, some other form of intellectual property. So let's say Starbucks Ireland has to pay Starbucks in the USA a certain amount of money every year for the right to put the Starbucks logo on the coffee cups. Well, then that money isn't taxed. And how do you value an intangible asset anyway? Many companies use what was called the double Irish. They set up 2 Irish companies. One of these companies is resident in Ireland. The other, even though it's named as an Irish company, is resident in a tax haven like the Cayman Islands. The company that's registered in Ireland has to pay royalties to the company that's registered in the tax haven. Those royalties are in actual fact the profits of the company in Ireland, but they just funnel them off to the tax haven and the taxman doesn't touch them. Now, the double Irish loophole was closed in 2015, but the government got rid of the cap on intellectual property purchases, which was set at 80%. Now companies can offset 100%. Another way the rich and the corporations avoided paying tax was the Section 1110 special purpose vehicles. This is where a company like big Canadian landlord firm IRES would set up an Irish division, which they did, called IRES REIT. The parent company would give a loan to the Irish subsidiary. Using that loan, they would buy up Irish property. When they started making profits from renting out apartments in Dublin, those profits could be offset against interest repayments on the loan to the parent company. If they could balance their books or make it so that the interest repayments on the loan to the parent company were the same as the amount of profits they'd made, they'd pay no tax. But just as the Irish government was claiming to close some of the other loopholes, they were opening more. The so-called knowledge box allows companies to write off research and development. You get to pay a corporation tax rate of only 6.25%. But how did the corporations get away with it? Since the 1980s, in the time of Charles Haughey, the Clearinghouse Group have met in the department of the Taoiseach. In room 308 of government buildings, the heads of Citibank, KPMG, Bank of Ireland sit down with senior figures from the Department of Finance, the Department of the Taoiseach and the most senior civil servants. 21 measures that were in the Finance Bill of 2012 were written by these companies. One UK think tank described Ireland as a captured state. So Ireland is a tax haven. Ireland is a captured state, works in the interests of the corporations, in the interests of the Irish and the international elite, not in the interests of the people.